Good morning and welcome to the early bird. And here we're looking at the Dow Jones here on a daily chart. I don't have today's bar in there, but as you know, we're down about 430 odd points. So we're down into around here. But what I wanted to do here was just sort of go back over the larger picture that we're looking at. So you kind of know where we are, and it's not to say that that it's actually going to unfold like this, but we do need to put a few things on the table and work with a few theories. But there's a big difference between analysis and actually trading, so bear that in mind. But it's always good to know what possibilities lie ahead. And in terms of the Elliott count, it looks a little bit like this. So essentially, we've got down for wave one. We've got back for wave two, and we've got down for wave three here. Now this is a minor degree structure here, and then we've got wave four, and then we've got wave five coming down. So we've probably started wave five coming down here already. So in wave five here, there'll be smaller five wave structures in that there. And I think that we're actually very close to the bottom of this first one here. That's where I think we are, just in here, and we'll be talking about that. Now, there is within this wave from two to wave three here of minor degree, there will be five waves inside of this here as well, and we've got. It depends on how you count it, and technically correct that I can count it like this because this low was lower than this high here. So we've got down for one and back for two. Now, we may only be at the number three down here, and this may be four here, and then we come down for wave five here. Yeah, then that wave three here would be here like this. Yeah. Then we come back up for wave four, which normally pulls back to the wave four one lesser degree, and then we go down for this five here. So this five that we're going through at the moment here may be just down for the wave five here, which would come down a bit lower than the wave three here. And it would be a short, I know that it would be a short wave five if this was the case here, because of wave one here with shorts. So normally when you get a long extension in wave three, then wave one and wave five will be the same. So we should sort of add up a little bit as well, because I know through some other Fibonacci extensions that the 10-2 here and the 10-1 are quite strong sort of ratio support areas. So a lot of sort of bouncing coming into the 10,000 is what I sort of expect. But I'll do more work on this and lay it all out now that we're sort of now that we're in that section, so. Yes, so look, and just also stepping out of that again to one bigger picture again, is that we are looking for the five wave structure coming down through here, down into the 10,000 area here, and I need to do work on exactly what target that is, but in that vicinity. And then we'll be looking for a three wave counter trend, and a three wave counter trend normally pulls back 61.8% of the five wave structure down, but that may not be the case. It may just come back into the supply area. So I would sort of strongly sort of look at the 11,500 mark there, and then we'll be going down from that point there. So this moving down through here in this wave one here, this coming down here for wave one and wave two here. If we look at this picture here that I have laid out here, this first five waves down here to make that 1, 2, 3, 4, 5, yeah, that would be the first five structure here to this five here, yeah, and then this little ABC here would be this ABC here to this little area in here, and then this move down through here is the beginning of a larger third wave down, in terms of down for one, back for two, down for three. Yeah, and we'll pretty much get that because it's not all done and dusted yet. But if we get five waves here, yeah, then we'll get another five here. That much you can be much assured of with Elliott. That's how it works. So that much we can be assured of. If we get this five here, yeah, which we look like we are, I'm pretty confident about that actually, then because of all the internal wave structures. So we're pretty much short of this and this here. And the reason I'm pointing this out for is that this ABC here will be, this will be either in 3 waves or 5 waves here, the A wave. This B wave will be in 3 waves, and this will be in 5 waves here, this C wave here. So what we're looking at, we're looking for the 5th of the C wave, and then we'll look to short at that point. Shorting from this point here would allow us a really long trend to the downside, and we may pull back up 61.8% because this move down through here also pulled back up very high as well. So we need to be aware of that situation there, but we'll count that and unfold as it comes. But I just wanted to point out that that would be the shorting point at here that we'll do in US indices and stock as well. And we need to be careful through here with long position, because this third wave here will be very strong and powerful coming through this section here, the third of the third here, and this is where short selling will probably be banned by ASIC and other people. So we may need to find other providers to find out who would close their doors, so to speak. I mean, in the last bear market, you know, most of them closed their doors. So we're with GFT this time, so I'll find out. Which brings me to another point too. The people that are using the GFT platform, we will stay with GFT because of the ordering system, and I'll make new. We've been developing the Robo method this year and using it as a trading tool, and it's produced some pretty good results. So we'll get that platform and get the orders working for there. And I do need to point out that that GFT do throw us a few pennies for getting you to sign up, but that's not the main point. The main point that I would like people to sign up for us under the Trading Lounge banner is it just gives us a little bit more power in dealing with them. So if you've got a problem about some situation, then as a group we've got more power to go in there and say, just fix this, you know, rather than being sort of a loner in the situation there. So it just gives us a bit more sort of power in dealing with these people to make changes and to fix things if things are wrong in terms of you know, a trade that never got triggered or something. So it just gives us a lot more power in that thing there. But that's a choice to you. If you use the links to sign up with it under the Trading Lounge thing, then we'll stick up for you in as a group. So anyway, moving on through here, then that's the general picture. So we're looking at a 5-wave structure coming down. And yesterday this is the Dow on a 30-minute chart here, and we were looking at, of course, we're looking at this A and this B and this C here, coming up to here. And yesterday we were looking at those first little 5 waves coming down through here. Remember these little 5 coming down through here on a 5-minute chart? We're looking at that, and we thought that, well, that could be the beginning of it. It may be wave 1, or it may be just the A wave in terms of an A and a B and a C, and then moving back up there. So to solve that problem, we used the 11,300 as the line in the sand. So under that would be a short from that point. And off we go here. So what we're looking at here is we're looking at the first 5 waves coming to the downside, and it would be something like this. I need to look at this a little bit closer, but it would be the 1, the 2, the 3, the A, the B, and the C for the 4th, and the 5th would come down. This is definitely a correction here because it's in 3 waves here. So that would be an A in 3 waves, a B in 3 waves, and a C in 5 waves. It's probably going to be a flat, so we'll end up seeing that roll down there. So if that gets stuck under there at 11,000, then you can trade that down short there. Now, of course, understand the levels between 11,000 and 10,000, and 10.8 would be important, 10.5 would be important as well. So 10.8 and 10.5 will be the first ones that you'll be dealing with. The 10.650 would be a subtle sub-level that will have a bit of a kick to it, and also the 10.772 will play out there. But what we're looking for here basically is we're looking for the 5 waves down to complete, then an ABC rally, and then the next 5 will be moving to the downside. So this little 4th wave here that I'm talking about, in 1, 2, 3, 4, and 5. This fourth wave here may just be part of somewhere still in the third wave in terms of down for 1, back for 2, down for 3, ABC for 4, and down for 5. And the fourth wave may still yet to come. So I need to spend some time in breaking this down and compare this to other markets. But this is basically the pattern for the Australian dollar, our indices, the ASX 200, the S&P 500, the FTSE, the DAX, and so all of them. So that's the basic sort of pattern there, and we need to work on that, and we'll be working at those wave counts to the downside as well. So when we look at the S&P 500 here, it was the same yesterday of looking at that little this was all a bit messy down through here, but having those first 5 little waves down there was the first sign that that it possibly had been finished up there, but we needed confirmation. But once again as well, we are looking for that 5 waves down there, but I need to pull that third wave apart there to find out exactly where we are within all of that, and I'll do that today. But once again, we're looking for 5 waves down, 3 waves back up, then 5 down. Now I've left that trend line there on the S&P 500 because what normally happens is when a market moves through a trend line like this, it will go back up and retest it, and that would be the resistance, even if it's up through here somewhere. So always good to leave them in there until the retest has been completed, and then we can move down from that point there. Of course, the S&P 500, we're looking down at 1,000, but we'll be looking at lower than that as well. The FTSE is the same as well. You can see the same sort of pattern through there, and the idea was to be short under the 5.3 there, and definitely the 5272 there to be short from that subgroup 2 area there was the go. But once again, looking for that 5 waves down, 3 waves back up, and then down again. So if you've shorted from the 72 lot here, then you want to be looking to hold those positions there. Sure, take some money at the 5,000, but basically looking for the 5 waves down, the 3 waves back up, and then hitting it again, because hitting it above the level here, as it goes down through here again, it will eventually lock under here the second time, and then it will be down from that point there. So the more that you can get above the level, the better off you'll be. But wait for the 5 waves to complete and wait for the ABC to come back, and all the other indices will be in line with that. But the more positions you can get above the 5,000, once it locks under here, well then that's sweet, you've got it tucked away there, and then we'll treat the 4.8 the same as well. So we expect these lows to be taken out here, and we'll be looking at the 4.5 to be taken out in due course. But the 47.72 and the 4.8 here, that's the, you know those numbers anyway, so I don't need to harp on about that. The Australian market's the same as well, and we were using the 43 as a line in the sand. This whole wave structure here has actually moved up, more so than the DAX, the FTSE, the S&P 500, and the Dow, and so forth. So it's not the perfect sort of wave count, and it was driven really up by the dollar, and because the dollar was in harmony with the S&P 500, it's really got to be money coming in from offshore doing all of that. So this as a 4th wave here was rather high, so it's still technically correct. It just doesn't quite have the right look and feel about it, but we'll run with it. But we'll keep a bit of an eye on it as well in terms of how it sort of pans out, and it should fall in line with the Shanghai market, the China market rather, and the S&P 500. Now that it's in a bear market, they all get in fear mode, they all lock in together. So anyway, just to point out that this, as you know, moved up quite high in relation to other global markets, but still technically stayed within its parameters as a 4th wave, and we'll run with that. But what we're looking for here now is the first little 5 waves down, so it'll be 1, 2, 3, 4, and 5. And then we'll get a 3-wave counter trend, and then we'll get the next 5 down. So basically down for 1, back for 2, down for 3, back for 4, and down for 5. So we should be taking this low out here. That's what we'll be looking at, but it's not always that simple, so we need to bring in the levels, and of course the 4,000 is the medium level. The 4.1, the 4.2, and the 4.3 are all part of minor group 1, and the market will start bouncing across those levels there. So you need to work with those sub levels within there as well. But I'll hone in on this one here and spend some time on this, and we'll get it nutted out to find out sort of where we are. But essentially, it's already, the horse has bolted. It's still got a bit more to go here, but then we're looking for a counter trend there, which could take a session or two, and then we move down from that point. So down for one, back for two is where you want to look for the short. It would be an ABC, a 5-3-5 structure, and then we can move down from that point. But we'll use the levels to trade there. Of course, when fear comes in, gold goes up, and that's what's occurring here. And if I can just sort of squash this in from the bigger picture here just for a second. Of course, we've always been looking at 20,000 since we've been above the 1,500, the medium level there. That's just the way the cookie crumbles. And for me, it's no different. Nothing's too high, nothing's too low when it comes to the markets. And it's just a matter of getting from one level to the next level. And certain numbers act like sort of magnets to pull things along. We know that 18 is a profit-taking number, and that's we watch it get hit here, and this is the arrival, the reaction, the support, and this is the first high above the level, and there'll be 5 waves in this sequence going up through here. And once that's into play there, then we can expect an ABC correction coming down through the level as such, some ABC thing like that, but even bigger than that as well. So watch that run up to there, and then we'll see it come back. But the longer term target is the 20 up there. And oil, well, it follows stock, doesn't it? But we were looking at it on a daily chart yesterday, and that daily chart we were looking at the increasing volume to the downside, and then we're looking at the diminishing volume coming to the upside on the daily thing. We know that 8 is a profit-taking number. When you've got 2 of them together there, they've got a bit of a kick to it, but there you go. So it appears that it's got the same structure as the stocks. So that will just come down and bounce off the 80 there, and we'll get a 3-wave correction, and then we'll move down from that point there. And of course, copper is involved in this as well, base metals. And we were talking about it being positive. We understood that this was, we weren't fools. We understood this market coming down through here was an impulse wave, and this was corrective. It was just lagging in its run up there in relation to stock. And we thought, well, let's look at some of the little levels in here, like the 403, the 405, and then the 410 here if it gets support on that. It didn't really get much support on any of this here, but anyway, point being now is that we're looking at 5 waves down. We'll look at 3 waves back as a retest to the medium level 4 here. Be $40 to the pound. This is 0.5, so 400. So anyway, but retest of this for wave 2, down for wave 1, back for wave 2, down for wave 3. So that should be taking out new lows here. This is a corrective pattern because it's got overlapping wave structures, and a correction with overlapping wave structures is a continuation pattern of the current trend. So that's the current trend. This is a continuation pattern. It's a corrective with overlapping wave structures. So it should continue down, taking lows out through here. The currencies. Now, you know that we had 2 wave counts for the currencies, and this being the euro here, euro US dollar, and this is possibly the top of the triangle that we were talking about yesterday. So it's likely that this is going to run with the S&P 500 with stock. So we'd look for downside with this here. But once again, what I would like to see here is a nice solid retest here, because at the moment we've got kind of wave 1, wave 2, wave 3 here, hopefully wave 4 and wave 5. If we can see a clear 5-wave structure through here, then we feel like we've got something. At the moment it's a corrective wave, and it's quite natural for this to be, above the level, and then the ABC coming across here and eventually finding support and going up. So we're still bearing that in mind, but as it stands at the moment, if it's going to run with the S&P 500, that means it will move to the downside, and we need to count 5 waves down, 3 up, and 5 down again. If that's the case at this stage here, it shouldn't come back up above this wave 2 here if this is a wave 3 here, so it shouldn't come back up above the 14430 there. But it's not in cement just yet, but that would certainly look like the case there. And also the US dollar index, we were looking at its five-wave structure down. We understood if it came under the 73.50, then it would be part of a bigger bearish picture down. It's making sort of headways back up. It does appear that it's got a five-wave structure here. I need to pull that apart, but this could be the beginning of much higher ground to be covered. So let's just see how we go with that. We'll just allow the euro and the US dollar to settle in a little bit, and we'll pick up the thread for them. But both of them could be on long-term trends in their directions now, the US dollar to the upside and the euro to the downside there. So work in that direction and look for trades in that direction. So anyway, that will become clear over the next session, what's going to occur there. The Australian dollar, we were looking same as it's in tune with the S&P 500, and we were looking for it to come back up. I haven't got it on here now, but the 61.8 retracement level, which is up around the 106 here, just above that. So that's come in nicely there, and will be working itself to the downside. So much the same as we've been talking about stock in terms, we'll be looking for 5 waves down for wave 1. That could be higher than that, so there. So we'll say 5 waves down for wave 1, and then we'll look for this wave 2 coming back. So 5 down, 3 back here somewhere, and then the next 5 coming down. But we'll pull this apart now as well. You're not going to miss much here. This is the point. Because we want all of these markets that have moved down, they will, I mean, our local market will gap down, sure, but what we're sort of looking for is this 5 waves down, 3 waves back up. So when it comes to stock, the stock will be moving, will move down, we'll say gap down today, but then tomorrow, if we get this 3-wave counter trend coming back up across indices and so forth, then Monday, we could have a little push to the upside. Not probably though, because normally wherever it closes on Friday night is kind of how it's going to open on the Monday. So yeah. So if we're closed lower on higher volume today, then we can expect gap down on Monday as well. So see how we go with that. All right, look, generally you've got the gist of it. You know that we can be facing the possibility of a much larger move to the downside, and you need to prepare for that. I know we've got a couple of longs in the market there. They may have got those switch trades, they've probably got stopped out, but we understood that when we took them. And our main effort is to the downside, so that's what we'll be looking at from here on in. That should be pretty easy to work with because impulse waves, like 5-wave structures through here, are much easier to work with rather than corrective moves. Yeah, so right, that's sort of, yeah, that's about it really. Okay, alrighty, well, good morning and good luck.